see the kind of industries that are opening up.
This is Local Biz Now with Joe Vagnone, where your business matters. Local Biz Now.
You have to determine what is working, what isn't working.
Joe Vagnone is a respected business broker, helping individuals buy and sell businesses. Joe has successfully owned and operated many companies in a variety of industries. This is Local Biz Now, because your business matters.
Are we live?
We're live.
Oh, boy. Okay. Welcome to WSIC. I am Joe Vagnone. This is Local Biz Now. We had a little technical difficulty this morning. We're gonna put it together. Yep. We're gonna put it together. That's okay because I'm with a seasoned pro when it comes to broadcasting. I'm here with Ben McDonald. And Ben, thank you so much, buddy. You just see what live radio looks like, my friend. Thank you so much.
Hey, we're not here to try and be perfect anyway. We're not putting on the front, so we're completely fine.
I do the best I can every Friday morning, right?
What you're doing is you're humanizing yourself for your audience.
That's right. I did that on purpose.
Yeah,
That's right.
Of course. It was planned.
Right. So thank you so much for listening. I do appreciate it. This is the #1 talk business show in all of North Carolina. I am Joe Vagnone, and this is News Talk WSIC 105.9 FM, 100.7 FM, 1400 AM. I'm going to prove it to you why we are #1 in North Carolina. We've been doing this for 10 years, going strong. I have over 800 small business owners and community leaders that we have interviewed. We have well over 400 videos on our sexy, brand new YouTube channel. Julie told me we lost a subscriber last week. I must have offended somebody.
You're not going to have me back ever again.
I am going to blame Ben for losing the subscriber. We're down to 68. We had 69, Ben. You owe me 2.
All right.
Ben, you owe me.
I'm just going to go around telling people to start subscribing so you'll have me back next week.
That's right. But it is a great YouTube channel. Please go there. There's a lot of information. We hope that we inspire, inform, and entertain you for the next hour because if it's WSIC, your business matters. I want to give a special superior shout out to my niece, Rosie. Rosie is on her way to school today, and I told her I'd give her a shout out because I can.
That's right.
Rosie, I love you, darling. I want you to have a good day at school. She will be the next rocket scientist.
Oh, yeah?
I want you to know that. Yeah, there's no doubt about it.
That's
Ben,
amazing.
you're not the smartest person I know. I want you to be clear about that.
I'm definitely not. I'm fully aware.
My niece is on the way of
How old is
adding
she?
to that list. Oh, don't ask me questions about.
Okay, that's fine.
10.
Yeah, elementary school.
I'm gonna say 10.
Yeah.
I hope it's 10 or close to it. Anyway. Okay. Anyways, so although the show started off bad, and I know I'm making it look like we don't know what we're doing here. I got to be honest with you. There's very few people that know wealth management better than Ben McDonald. Ben, thank you, my friend, for being here. I appreciate
you having me on.
Let's remind everybody what Destination Wealth Advisors is all about.
Yeah, so we're a fully comprehensive wealth management firm that primarily serves business owners and then people with complex situations. So what we do really well is we intertwine the investments, the tax, the estate. We put all that together to create an entire plan of situation so people who are business owners know, hey, if I want to have a succession, when is that going to happen? What do I need to do ahead of time to make sure I'm not at the end of the road trying to figure out my taxes or if this is the right move or anything like that? We weave all that together. And I took this opportunity because you're here to contact my partner and managing partner, of Inline Business Broker, who I've been affiliated with for, I'm losing count. Yeah.
It's been a while. And I thought I'd get him on and we could talk a little bit about that. It'd be kind of interesting to get your perspective, right? Mm-hmm. And ours as business brokers. Jeff's at a high-end level like you. And I'm at the lower end of the spectrum. When I say low end, I'm from $5 million in gross sales on down.
Right.
Jeff deals at $5 million and above. You also deal at $5 million and above, correct?
We do. Yeah. Most of the businesses we serve are in that kind of 5 to 20 range.
Right.
So not the larger businesses, but the mom and pops, we can do, there's just not as much complexity, so we don't offer as much value compared to the more complex situations.
You say value. I want to disagree with you. You had a lot of value. It's leverage.
I mean, relative to competitors.
That's
right?
correct.
Like there are other competitors that can do the more simplistic. Just say, let's say a retiree, right? A couple of people that are going to retire. They've been a W-2 employee their entire lives. That's a pretty straightforward plan.
Right.
We've put together a really high-level team that can deal in the weeds and figure things out that most people can't.
Yeah.
That's where we
And we're going to talk about that a little bit. I mean, I had a client who had a divorce, and he had a settlement. He had to pay it before he could sell the business. And we got into I get into some frustrating stuff from my end. So we'll bring Jeff on, and we'll talk about some of that. It'll be some interesting stories for those of you that don't care about buying or selling a business. There's still some interesting stuff coming, and we'll probably do that in about 10 minutes. But I did want to thank you, Ben, for being here. It is rare and unique that I get somebody of your caliber that can talk down to my level as we're having this putting on this radio show. So I thank you so much, my friend, for doing that.
Yeah, thank you.
Now you're responsible for bringing something every single week to the show. You understand? Yes, you are. Before we do that, please tell everybody where your website is if somebody wants to go check you out.
Yeah, we kept it easy. It's just a company name, so destinationwealthadvisors.com. And then I'm all over the place, too. You can find me on LinkedIn or Instagram or anything like that.
And you and your buddy are doing a podcast. Talk a little bit about that.
Yeah, so we co-host together a show called Anything But Typical, and we interview business leaders, primarily here in Charlotte, but we've started to expand a little bit. And it's essentially going through their stories and pulling out nuggets of how they had success by going against the norm, right? Not just buying into what society tells them they should be doing, going and figuring out what does success mean to themselves. And it's been a ton of fun. We've been doing it together for about 3.5 years. We've got, I think we're at about 20,000 downloads and I think another 10,000 streams. So it's starting to come together. And I just have a blast because it's interesting conversations with interesting people. And
I've listened to some of those podcasts. They're just phenomenal. I mean, the people you're getting are just exceptional people. I really do encourage people to go there. It really is good. It's good stuff. Julie has actually put that on the book. So if somebody wants to go there and check that out, they can check that out as well.
Perfect.
So what is the article that you bought for us to talk about today?
All right, so we're talking AI today. We're talking artificial intelligence. Well, you, I think yesterday, put something out on LinkedIn. You want to share that with the listeners before we go into this?
No, I do not want to take it up. But
No, I mean share what you did. You don't need to read it out. But.
No, what I mean is, no, I don't want to share it because no, I don't know.
Okay. Got it. All right.
I've got social media people, but I will tell you, I found about a month or two ago the chit chat thing, right, where I can take my horrible, sloppy words and plug it into this website, and it makes me sound so spectacular. I love it. Matter of fact, for years, I mean, as long as I can remember, I would not send out a letter that was important to me unless I gave it to my wife and had her correct it. And then we would argue about the intent or the spirit of my letter, which is not why I sent it to her, right? Just tell me if it's spelled right, and that's what I want to say, and that's how I want to say it. But, you know, my wife can't accept that. She wants to make sure I'm presenting myself as best that I can. So about a week or two ago, I was writing a few things, I call it the Terminator.
Okay.
Send it to the Terminator, and it comes out just spectacular. And I sound like the smartest man on the planet. I sound like Ben McDonald, right? Like I'm the man, right? And so the other day I told my wife she's obsolete.
Which is a perfect thing that you want to say to a spouse, right?
Of course.
What could go wrong?
Yeah. And that's exactly how she replied. That statement alone makes me feel comfortable that there will always be a need for somebody to correct you, Joe. But to your point, it's changed my world.
Yeah.
It has made it easier for me to feel comfortable sending some stuff out, knowing that it is at least at a reasonable level instead of my most emails 3 or 4 words are spelled wrong. It's what it used to happen for years.
It also, and what you were talking about was ChatGPT, right? And so there are other things like that also. Google has something called Bard, which is actually connected to the internet. ChatGPT's got some things where it's getting there. But it's also giving people access to conversations that is way above their level. So the easiest example is I was putting my daughter, she's 7, to bed the other day, and she's really interested in outer space. And I pulled up ChatGPT to explain to her what black holes were, because I can't explain that to her.
That's right.
But I asked this tool to explain it at a 7-year-old level, and it gave analogies and stories and things like that to where she understood. And I've done that in business of the Silicon Valley Bank and things like that, where I took a complex situation and made it where it was accessible to my clients and the people following me. So we can send an email out and they know exactly what's going on, how we're handling it without talking over their heads. So
it honestly has what this has done for me is what the calculator did, right, for a guy like me, and Excel has done for me, right? I no longer have to use my fingers and toes to count up as I'm putting together valuations and that sort of stuff. It really is just an exceptional program. Let's take a break and we'll come back.
Yep, perfect.
You are listening to Local Biz Now. I am Joe Vagnone. If it's Friday morning, say it, Ben. Say it.
Your business matters.
Yeah, we'll be right back. We're back. You are listening to Local Biz Now. I am Joe Vagnone. This is the #1 talk business show in all of North Carolina. We've been doing this for 10 years, going strong. And my co-host for the entire month, Ben McDonald, the founder and managing partner of Destination Wealth Advisors, is one of the reasons for that. We hope to inspire, inform, and entertain you. I'll do the entertaining, and Ben will do the inspiring and informing. Okay. Ben, we were talking about AI before the break.
Yeah.
Let's continue that conversation just a little bit longer, because it really is remarkable to me how I tell Julie, I call it Terminator, right? I really do see it being able to control large parts of my life, right? I see that. Sure. And it will help certain people that have weaknesses substantially.
I don't think there's anything that's come into business since the internet that is going to be more impactful on how people do business, which is why I wanted to make sure we talked about it. And it's going to make people more successful. But one of the things I'm really interested in, especially for your show and this audience, is it's going to give smaller business owners access to significantly more firepower, right? So currently, you have to go hire everybody for all these things. Think of this as an intern that is infinitely smarter than you in one area. right? So there's these things like ChatGPT and Bard that can help you, but then there's also like Pictory is a really big one that can help you do pictures. There's videos.
Whoa. Pictory.
Pictory, yeah. So there's a ton out there, and who's going to
Really?
win?
I only know about one, the Terminator. I don't know about all these,
Yep.
Ben.
So this is also, I mentioned internet as the comparison. This is similar to the tech bubble where everybody would put a .com on their company, and then 95% of them ended up failing. It's going to be very similar. We don't know which ones are going to win and which ones are going to lose. They're the leaders, right? GPT is a big one. There's one called Jasper that helps with your writing. Think of that as like a writing assistant. There's another one that I was going to mention. Let me go into it in my article. That was Fireflies is really interesting. So Fireflies can record every video, or every meeting that you have. Let's say you're on Zoom or Teams or something like that. It's going to record it. It's going to transcribe it. It's going to give you notes from the meeting, and you can then go back through the whole transcription and pull anything out after. So the days of taking notes during meetings and missing something or missing a note because you're listening or missing.
Be careful. You getting ready to make Julie obsolete in a minute now if you're not careful. Oh, Isaiah's giving me that look. I said, oh, that was a mistake. I didn't mean that, Julie. I didn't mean that. Whoa. It was a slip. It was a slip of the tongue.
Yeah. I think these tools are going to give people like Julie more bandwidth.
Right.
That's what it's going to do.
Right. That's right.
Because
so she can be a part of the meeting and not have to worry about just focusing on what everybody's saying.
Right. Yeah,
right.
Absolutely. And instead of me trying to take a note down and so I miss what somebody's saying in a podcast or something like that, or vice versa on my podcast, what I've ended up doing was take less notes and then go through and re-listen to the whole thing. Something like Fireflies means I don't have to do that because it's doing that for me. Another thing that I think is really interesting, it's called Motion AI. And what it does is it takes think of it as like an executive assistant meets your to-do list. So what I do is I put all my tasks, all my projects in, how much time I need to spend on it, what the deadlines are, is it a hard deadline, soft deadline, is there anybody else I'm working on it with, right? All the specifics you would put into any sort of CRM system. And then it takes that and it puts it into my calendar and says, okay, you're going to work on this project or this task for these 30 minutes. And then
that's a Terminator. That's a coach.
That
bothers me, Ben. You're too efficient. I'm not that efficient.
That's the thing. I wasn't either because I'd be going off this to-do list and then I'd have a note written somewhere else, and then all of a sudden, I've got a meeting that I have to attend.
Right.
And so things slip through the cracks, or you miss a deadline or whatever. And this is literally telling me, based off my parameters, I can say, when do I want to work? Do I need to block time off? Do I have other meetings? Whatever. But it will change my schedule and say, okay, this is when you're going to get things done. And let's say this Motion AI scheduled something for 10 a.m. and then I needed to schedule a meeting then. It will automatically take what it put there and reschedule it.
Wow.
So I think it's going to empower the small business owner tremendously and level the playing field of.
And what it's going to do is it's going to allow me, somebody who's got a Julie, which, by the way, everybody needs a Julie, and it's going to allow me to expand and leverage what she can do for me.
Yes.
Not do less, right? But be able to do more because these functions, somebody else or something else can do them.
Yep, that's it. And I can't remember this. I saw a clip. I can't remember the name of this AI, but there was a guy who his sole job was editing podcasts, and there were different video angles and all that, and his job was to go through and cut it all up. Well, he created a video clip of using an AI. He uploaded the video, clicked the button, and it did his job in 20 seconds. Wow. He was like, well, I'm now irrelevant. But to your point earlier, it's just going to change what these people are doing. Right, just like the internet did, just like every sort of evolution always has.
That's right.
We don't need to do the manual labor we used to do, just like now we don't need to go and spend an hour.
And it's changing my expectations. I mean, it's changing what I can offer the clients.
100%. In the wealth management space, it's going to be a game changer because we can get much more analysis of what type of investment should we be doing, what type of tax strategy should we be doing for clients, all of that, because now we're going to have this infinitely powerful software and AI tools behind us that can do the job of 50 analysts. Right. And so my portfolio manager is already starting to use some of these things to do research on top of what he's doing and make sure, is he missing anything? Should he be looking at something at a different angle? Are there macro environment type things that we're not factoring in? And so that's what I really think it does. It's going to take these people that are already doing the job, and it's going to make them better at it, and it's going to make small business owners more powerful, because now they can have, essentially, think of it like I said earlier, the intern, they can have all these people working for them, whereas really now it's just AI that's supporting them instead.
It really is just intriguing and remarkable.
Yep.
Okay, you messed up my entire plan. I've got my partner and founder of Inline Business Brokerage and managing director on the phone. Jeff, are you there, buddy?
I sure am. Good morning.
Good morning, my friend. Hey, listen, I don't want to keep you but about 10 minutes, but we've got to go to a break. So let's do this. Before the break, tell everybody what Inline Business Brokerage is all about, my friend.
Well, we're a North Carolina-based business brokerage firm established in 2003, serving small and medium-sized business owners that are looking or needing to exit their businesses.
So you and I met. I was talking to Ben. Have I been with you 10 years? Has it been 10 years?
I hope not.
Okay.
Jeff's like, it won't be another 10, I promise you that.
He's already looking for a way to end this. Well,
I actually do keep track of those metrics, and it's been about 8 years.
8 years. Okay. Thank you so much for taking the call. One of the reasons, not just because I respect Jeff, that I asked him to be on the show, but he also was the past president of IBBA. He also is on the executive committee. So if there's anybody that knows the state of small business and merger and acquisitions, it's Jeff. And so I want to talk to you about that process, Jeff. But I want to go to break first so that we've got plenty of time to talk with you. So I want you to hang on till after the break. But we got about a minute. I'd love for you to talk about how you see the difference between what you do and your level of business and what I do in my level of business. You got a thought on that?
Well, I think what you do is a lot harder than what I do, and I say that in all sincerity simply because Main Street or smaller transactions, 5 million revenue and below, you're engaging with clients that are great business people, very successful business people, but not very experienced in the transaction of their businesses or the exit. So you're educating the small business owner usually from the ground up, whereas I'm working primarily, I do Main Street transactions as well in the Raleigh Central North Carolina market as well, all the way out to Wilmington. But my conversations are with private equity groups, sometimes with venture capitalists, with home offices and family offices that are experienced in the purchase and sale of businesses. So while we have a lot in common, of course, I think that working in the space that you choose to can be a lot more challenging.
You know, I like to tell people you deal with numbers and I deal with emotion. Is that a fair way to describe that?
Well, there's emotions throughout the scale. I like to say that it doesn't matter if it's a $200,000 transaction or a $20 million transaction. Whoever's a stakeholder and sitting at that table, that's a lot of money to them. So we see emotion across the board.
So it's interesting that you say that, because I would not have thought as much. You know, in my world, I hear people say all the time, it's just business. It's not personal. Jeff, it's real personal all the time. I guess it's personal no matter how big the numbers are.
That would certainly be the take that I've put on it.
Let's take a break, buddy. When we come back, we're going to dig into the state of the industry, and I can't think of anybody better than Jeff Snell, the former president of IBBA and a friend of mine, whether he will admit it or not, and the founder and managing partner of Inline Business Brokers. If it's Friday morning, say it, Ben, say it.
Your business matters.
Yeah, we'll be right back. back. You are listening to Local Biz Now. I am Joe Vagnone. This is News Talk WSIC, 105.9 FM, 100.7 FM, 1400 AM. I am Joe Vagnone, and we've been doing this show going on 10 years strong. This is the number one talk business show in all of North Carolina. And if it's WSIC, your business matters. We have on the phone Jeff Snell. He is the founder and managing director of Inline Business Brokerage. Jeff, are you there, buddy?
I sure am.
Thanks, my friend. I do appreciate that. We've had all manner of technical difficulty, so I don't have to ask you what you want to talk about because we already know what you want to talk about. And I have some stuff that I want to talk about. Let's try and get to it so we can get to as much as we can. You wrote a article, you like to call them because you're a big brain guy, right? White pages. I call it an article about interest rates. So let's talk about that because I'll tell you something, Jeff. Interest rates for small business went from about 6.5 to about 10.5 in less than a 7 or 8 month period of time. And I had a lot of small business people that looked at me and thought to themselves and said to me, this is just not the time to buy a business. And of course, Jeff, you know me. I said, but it's a perfect time to sell your business and finance the sale and pick up 10.5% interest. And so that was my solution to the problem. You tended to have a different take on it. Go ahead and give me what you got, buddy.
Well, I think there's two primary considerations here. One is, as far as timing, I feel it's like the stock market. Business ownership is not something that you should time. What we're seeing in the marketplace now is higher interest rates. Prime plus 2.75 is the maximum SBA allowable rate, which is putting us at 11%. That sounds shocking. It's a double digit. We haven't seen it in decades. Understand that. A pain point, absolutely, for small business buyers. But we also are seeing lower multiples. So your overall purchase price is lower. You're not paying a 3x multiple. You might be paying a 2.75 or a 2.5. Some instances you may even be paying less. So if you look at the net project cost, even though interest is high, admittedly, it's painfully high, your net project cost, total cost of ownership, is really not any higher than it's ever been.
So Jeff, real quick on that. When you're saying the multiples are lower, what's the reasoning for that? What's your thoughts there?
Well, multiples are driven by the subjective factors in the marketplace. And in this current market, I feel that inflation combined with high interest rates are having an adverse effect on the final purchase price multiple. And just for our audience, when we're talking about multiples, this is a multiple of either seller discretionary cash flow, which is defined as the amount of money that a business generates for its owner that they can spend at their discretion. They can pay themselves a salary, dividends, they can go on trips. It's discretionary. Or in a larger transaction, we talk in terms of EBITDA, earnings before interest, taxes, depreciation, and amortization. We're taking that profit component from the profit and loss statement, and we're multiplying it by a number to derive a purchase price or the enterprise value of the going concern.
And so to clean that up for some people, what we're really saying is how long is it going to take you to get your return back on your cash? And when we say multiple, is it 1 year, 2 year, 3 year, 4 year, 5 years, and that sort of stuff? And that's what we're trying to get a buyer to get comfortable with. At the same time, we're also trying to get a seller to be comfortable with that number. My solution...
And that's assuming
yeah, go ahead.
And that's assuming no growth. So... most businesses that are purchased are going to continue to grow. So your effective return on investment, if you purchase at a 3 times multiple, in most cases is going to be less than 3 years.
And so my take on this, now again, for those that are listening, I deal with a lot of small businesses. My take is, why don't the seller consider financing because you can pick up the interest rate? Ben, I'd love to get your take on
financing?
this. Yes, owner finance. Ben, I'd love to get your take on this as a finance kind of guy. But to me, even if you wrote me a check for the value that I think my business is worth, I can't get 10% on my money. Right. So why not finance it? I'd love to get your take on that.
Yeah, right. You're essentially becoming the bank, right? You're putting yourself in that position, which is how banks make money, especially in a high interest rate type environment like now. So, yeah, I mean, it makes a lot of sense. What people get hung up on is their comfort level on it. They've never done it before, the risk associated with it, things like that. It's easy and clean to say, go get your own financing, come pay me, and I'm just going to be done with it. So when you're having these conversations, Joe, how are you having those conversations with the sellers of getting them comfortable with doing owner financing?
Yeah, and Jeff, this is where I want to get you involved because I know it changes when the dollar amount gets bigger, right? But in my case, I tell them we can create triggering events inside the guarantee papers and also the loan documents so that you're following and tracking when and how we do these owner finance deals. For example, one of the things we love to do in our deals is add triggering events. If something happens that affects the business in a material way, I, as the seller who financed your business, now my calculated risk is different, so I'm going to ask for some things differently, maybe more cash, maybe more principal to be paid, or something like that, right? Jeff, I'd love to hear your take on this because obviously when you start dealing with $10, $20 million, that changes things, doesn't it?
Well, the size certainly does, but what has happened in the last 5 weeks, SBA guidelines have changed dramatically, and proposed changes that are expected to go into effect August 1st make it such that under 511 HL, which I know nobody cares about section and verse, but sellers are going to be able to get 100% cash at closing, and buyers are potentially going to have no down payment. This is probably worthy of another segment or another show at another time. But the seller financing, as Ben said, sellers are risk averse. Human beings are risk averse. And when there's a commercial loan by a bank for a 7A program under the SBA, the commercial bank has a guarantee from the Small Business Administration. The seller doesn't. And the seller is in second position behind the bank in first position. So I tell my sellers, look, if we're talking about seller financing and we've got to make this entire package work, I want you to appreciate and understand that you're in second position, which for all intents and purposes is last position.
So, and this can go to either of you, but I'm really curious of, on the flip side, the people that are looking to buy a company, and one of the options that comes up is to do seller financing. There's risk on that side too, right? Of, okay, the key is the person selling a keystone in the business, meaning when that owner goes away, the business decreases in value, things like that. So what are things you guys are looking at with somebody looking to buy a company where you can be comfortable purchasing on a seller financing situation?
Jeff, you want to take that?
Sure. So right out of the gate, what we're looking for is a meaningful transition period. We want that seller to hand off as much of that personal knowledge and expertise, make the introductions to clients, to vendors, to all the operational aspects of the company to mitigate or minimize the risk of that new owner not being able to be as successful.
Mm-hmm. Yeah, that makes a lot of sense. It's in our world, because we've brought advisors on, and one of the things that's come up is an advisor looking to make a change, come join us, and we are their retirement plan. And what we've seen, and this is not just our industry wide, but really throughout industries, is if the person comes and leaves within 6 months or a year, there's a mass exodus of clients. So it makes a lot of sense of what you're saying of having a meaningful transition period, because that allows there to be some continuity. Clients or customers are not upended, and it provides that stability that a buyer is looking for.
You know, it's interesting because what you're describing is some of the triggering events we put in our loan guarantee documents and promissory notes. For example, a triggering event that I use a lot is if gross sales drop below 20% of what I sold it to you for, right? Clearly, something's happened in the business. Yeah. And if you want me to continue financing at the number I'm happy at, 10.5% interest, right, it's going to require a 10 or 20% additional principal payment because you've triggered something and sales have dropped. Yeah. So you are watching things like this, and Ben brings up a really interesting point, and that is I require all of my sellers to make sure that in the document, when they receive a payment, they're also receiving a P&L and a balance sheet. So you're watching the business change, alter, hopefully for the better, right? As you're receiving your check. So you know what's happened. It is not a surprise. It would not drop 20% in a month, right?
Yeah.
Unless there's some major material issue. So you should be able to keep an eye on that. Mm-hmm. And again, I am talking about smaller businesses when I have this discussion.
Have either of you had a seller financing situation go wrong?
Jeff, you want to answer that? Jeff, I don't know how much seller financing you do.
Well, I'm not a fan of seller financing personally, and it's not because I'm so pro sell side. I don't think it's in the buyer's best interest either. Their total debt service is generally the same. A note that's in second position is obviously at higher risk. In theory, should have a higher interest rate than the SBA guaranteed note. We don't see that in the marketplace, but from a theoretical perspective, that makes logical sense. So we have, as business intermediaries, business brokers, merger and acquisition advisors, have a huge toolbox of structuring tools that we can bring to the table that I feel are more effective and better for the seller as well as better for the buyer than seller financing. Now, is that in our toolbox? Absolutely. Is there a component of it in transactions? Yes, but it's not the first tool that we generally pull out.
And this is why Jeff's in Raleigh and I'm in Charlotte. We get along for 8 years. I absolutely disagree with him in that, for me, at my level, about 95% of all my deals have owner financing.
Really?
As a core factor. For me, it is the best, fastest, most efficient way for a seller to not only maximize the value, but also get an interest rate on dollars that the only way they can realize them is to get is for you to finance it. But remember, that's because I'm doing smaller deals, right? So banks aren't just throwing money at these smaller deals like they do want to finance these larger deals.
And the higher you go up, the prime plus is lower, right? Like
That's
Apple
correct.
trying to get money versus us trying to get money is obviously significantly different.
That's correct. Jeff, you wanted to beat on me, Jeff? Go ahead.
No, I'm not going to beat on you. These are all tools that are at disposal, and we're expected to fashion them together in a manner that works for everyone. So seller financing isn't bad. I just don't think it's the best.
Yeah.
And for the audience, let's define what small and large transactions are, because that's a pretty subjective approach. You and I know what we're talking about. Ben knows what we're talking about.
Well,
but small transactions I define generally as under $1 million. Larger transactions, and that's enterprise value, not cash flow or EBITDA.
That's right.
So when we're talking
agree.
about seller financing, that phrase, is often misunderstood. So you go to the biggest business for sale website in the world, and there's a box that says seller financing, and it's either checked or it's not. Well, that's pretty vague, because seller financing does not mean, by my definition, that the seller is going to finance 90% of the transaction. It historically meant that they were willing to participate in seller financing because many people thought it was an SBA requirement, when in fact, seller financing has never been an SBA requirement, although some lenders do imply or actually state that it is.
Yeah, Jeff makes a great point. I'm selling businesses at cost of $1 million or less. He is absolutely correct. When I get over $1 million, you just have to get a bank involved in some. So Jeff and I are saying the same thing, although I love to disagree with him. But the truth is, if you're under $1 million, I'll be honest with you, if you're under about $700,000, I am a firm believer that owner financing, and I mean a large portion of the deal, is owner financing and is the primary loan and financing source. When you get over that number, you really do need a bank, because, and I'll tell you how this works, you cannot get enough cash that it's worth selling your business, right? You need a certain amount of cash, or you might as well just keep owning your business.
Exactly.
And so there is a number that you're looking for, and if the business has a certain value, then owner financing really works. When you get over that number, go right ahead.
I think it's worth noting as well that if you're doing a large percentage of seller financing, by definition, you're in first position. So that risk factor that I mentioned earlier in the segment is off the table. You're now in first position. You have recourse with a personal guarantee with the UCC1 filing.
That is correct. That is absolutely correct.
But additionally, where this tool, when it is a majority of seller financing and not 10% as an example, the seller is going to realize tax advantages, because if you sell $1 million business and you collect $1 million at the closing table, your taxable income net of basis and other personal factors is $1 million. That puts you in the highest bracket for everything above, and Ben will know this better than I do, $400,000, $500,000. Whereas if you're taking structured payments over the course of 5 years, for example, you're going to be in lower brackets, and your net return on that transaction is going to be higher.
Oh, so you just hit my sweet spot. That because taxes is over and above the benefit of the interest rate. Jeff, I don't have time to continue talking about this, buddy. Thank you so much. I really do appreciate it. We need to get you back on with Ben, and we can dig into the whole tax thing. Yep. But like I was afraid, Ben, I told you, we get Jeff involved, we're going to get into the weeds. We're going to lose a lot of people. Jeff Snell, managing partner and founder of Inline Business Brokerage. My friend, thank you so much.
Thank you both. It was good to be a part. We'll talk to you next time.
You got it, buddy. You are listening to Local Biz Now. I am Joe Vagnone. You are listening to the #1 talk business show in all of North Carolina, and this is a small segment on why, because we know what we're talking about. Also, I got to tell you this. If it's Friday morning, I'm spilling a cup of black powder coffee all over my shirt as Ben's laughing at me. We'll be right back. We are back. You are listening to the #1 talk business show in all of North Carolina. This is News Talk WSIC. I am Joe Vagnone, and I'm here with Ben McDonald. He is the founder and managing partner of Destination Wealth Advisors. Ben, thank you for being here, buddy. I appreciate it.
Having a blast as always, Joe.
You know, Ben and you and I were talking at the break with my partner, Jeff. We could talk about that for an hour. The problem is we just get so much in the weeds. Mm-hmm. It is why you need professionals, right? You know, there's a reason for you and I and Jeff, you know. Yeah. I mean, we add so much value. Most of it is because of our experience. We don't make decisions for clients. We hand them all of the challenges, the risks, the options, and then they can make a decision. I love to tell people, listen, I'll give you options. You'll be the one to make the final decision because there are so many different ways you can take this.
Of course, and you're the filter there too, right? If they're trying to figure it all out on their own, they don't know where to start. They don't know if what they're reading is the best thing. You're that filter to give them their best options and then the guidance along the way. And that's a big part of what we're doing. We need to be, it's why we call the company Destination. We want to be along this journey with people to help them reach their destination.
And one of the things you guys do so well, obviously at a larger level, but so well, is when I, as a business broker, run into this challenge. We talked about it. I got 3 clients right now where they're ready to sell, got buyers ready to go, letters of intent all ready to go, right? The one question they have is, how much tax am I going to have to pay? Like Jeff just hit on a 2-hour topic, right? Which is how do we help the sellers deal with, because when you build a business from scratch and you've had it for 20 years, I can assure you, there's a whole lot of tax Uncle Sam is coming after, and it sure does make you uncomfortable. You know, it reminds me, Ben, I've had a home that I've owned for about 25 years, right? My wife and I lived in for a small period of time. I bought it for $72,000, right? It's now worth about $475,000. Mm-hmm. The tax will be more than what I paid for the business, right? Now, granted, it's 20 years ago, but still, not that I don't want to give Uncle Sam his fair due. It's hard, right? You know?
Yeah, of course.
And that's why we come to people like you to say, is there a way to soften the blow of this?
So for those that don't know my dynamic of the company, we've got a partner firm, BGW CPA, and they only do taxes for businesses. They've got a department that only works with succession planning. And it's because I needed that backing of the experts in taxes to make this as optimal as possible. Because to your point, the worst thing somebody can be doing is asking that question after the fact or on the last day.
It's only about 3 days before.
Right. It's just at that point it's too late. You haven't done any planning to lead up to it.
Right.
You need that strategy in place ahead of time. It's how you're going to go about selling the business. It's how you're going to structure the deal to make it to where it's not how much are you selling it for, it's how much are you keeping. So that's a big part of what we're doing is we're taking people through that plan. And then just there's infinite strategies that you can use, and not all of them apply. Some people are going to want to give money to charities down the road. So are we factoring a charitable remainder trust? And there's other people that they're going to, for your real estate situation, like, okay, are you going to sell that and put it into another real estate property? There's so many factors, and you can't do it yourself. And if you are, you're just taking yourself away from what you should be doing, which is running your business and getting it ready to sell.
Yeah, and I wish I still had Jeff on board, because the truth is that's one of the things he does so well. Ask these questions before we list a business.
That's it.
What are you going to do? How do you feel? Have you spoke to your accountant? Can we help you with this process, right?
Yeah.
It really is a beginning of the process, asking these questions, not at the end.
Yep, and that's the nice part of the dynamic of how we're set up is we don't want a generalist running the show. And this is no knock on any of the wirehouse firms, but
knock on them, Ben. Go ahead, knock.
So when I started my career, I was at Edward Jones, but all of the wirehouses are very similar. I had to know a little bit of everything, which is fine until you need the experts. And so our setup is, okay, you have a financial planner, that's your quarterback, that's your advisor. Then you have a portfolio manager running the investments. Then we're pulling a CPA in to do your taxes, and an estate attorney and business brokers. You need that team around you as a business owner, especially when you're going through a succession, to make sure that you have an expert in each area. You don't have 1 or 2 people that are trying to give you all the advice.
And here's how I define an expert. When his value is purely seen in the savings and the information you receive.
Yep.
If you don't see the value in Joe Vagnone as a business broker, Jeff Sellers as a business broker, you shouldn't have hired him to begin with. Yep. And we make sure that doesn't happen. Same thing with you, Ben. If they don't see the value right away, or they certainly will see it based on the tax scenarios that your partner is able to hand them, that's a major important factor.
It is. Cost is a big decision maker in my industry. And what we've realized is when we're laying proposals out now, we're showing them how much money we're saving and how much money we're making them.
Right.
That all of a sudden cost is irrelevant.
That's exactly right.
Yes.
That's why I tell them, don't worry about this fee, because I'm telling you, it's going to mean so little
when
by
we're
the time
making
we're done.
them or saving them so much more than what they're paying us, everybody's happy.
We're cheap, Ben. We're cheap.
Yeah, that's fine.
Ben, thank you, my friend. I really do appreciate it.
Thank you. Had a great time.
You are listening to Local Biz Now. Say it, Ben. Say it. Say it.
Your business matters.
Yeah. See you next week.
See you.